Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, as widely expected, the Fed kept its interest rates on hold at 5.25% and 5.5%. However, the market was somewhat choppy at the start of Powell's press conference after noting that the sound did come across as definitely hawkish as he had in previous press conferences. Powell said that the central bank still isn't sure its main interest rate is high enough to ensure high inflation will move down to its 2% target. However, likely to be data-driven, the market will continue to wait for economic data, that is, to determine the Fed's path. Overall, though, the market was quite happy to see the Fed keep rates on hold as the dollar index, which measures the greenback strength against a basket of 6 major currencies, decided to take a tumble from the highs of 106.96 and settles at 106.45. In viewing the Australian dollar, the market's maintaining its bullish stance as it now challenges the 60-day moving average around 64.0515. The market posted an intraday high of 63.98, but still holding to a relatively strong candle, and with the RSI rebounding off the midway point and marrying up with the MACD, that support further gains. A clearance of 64.15 will give further scope up towards 64.70 to 65.45, with any pullback likely to be shallow. The euro did take a brief down test, but you can see here we've got another dragonfly doji like previously we saw 4 days ago. In light of the current pattern, I'm not getting bearish. I still feel there is an upside potential, and if the euro can eventually clear that top side level around 106.80 to 107, then that would open up or clear the path further to 108 to 109, which I prefer. And continuing to see any pullbacks, I feel will be shallow and does or appears to give opportunity under 105.60. Since the Marubozu candle, there was little or demand when it comes to dollar yen, and still with a little bit of divergence here, I feel the market is pulling back. Now, if we see a break that is of the level of 150.35, then I feel that would indicate a further move down, and therefore look towards 147.5 and reassess. Sterling still lacking momentum, but all eyes on the Bank of England today, which is widely expected to keep interest rates on hold at 5.25%. If we do get a surprise rate hike, this could send the British pound surging across the board and ignite the move through the trend line around 122 and on towards 123 to 124. Gold was negative overnight, or bearish, as the market took out the level of 1,977 and now opens the path down towards the region of 1,950 to 54. I feel the market is still way overextended, and therefore the pullback to 50, let's see if the market can take that level out, as that would expose the region of 1,920. Any upside attempts, I feel, will be limited, with the resistance seen now around 1,990. Wrapping up with oil into the third bearish day, the market did take a brief look at that $82 break and was rejected, and still currently on hold for a challenge down towards $78 a barrel and reassess from there. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed a great start to the day.